Market rally resumes. The equity slide continues. Fresh trade tensions slide. President Trump taking a battle to Mexico, threatening to levy tariffs on Mexican imports, and the economy in China providing very little relief. Manufacturing data dipping back into contraction territory. 30 minutes until the opening bell this morning. Good morning. Good morning. Futures negative 30 points. Stocks down. Bonds up. Yields lower by 4 basis points on a 10-year Treasury to 218 on a US 10-year. So let's get straight to it. To begin with our big issue, the White House opening a new front in the trade war.
New tariffs on Mexico. The Mexico escalation, this is something to do with trade. To show that tariffs are being weaponized, the generalized sort of weapons. What's the incentive now to negotiate a deal in good faith?
The biggest issue here is the uncertainty. Uncertainty will be quite a dominant feature.
The negotiation at gunpoint makes it very, very nervous. A trade issue that's not going away and doesn't seem any closer to resolution. In fact, today it can take another step back. The read through to U.S.-China, which we are taking from that, is that there's probably going to be no short-term resolution. We might be worried now that while everyone is trying to in the White House, trade will be an issue.
Joining us around the table to discuss Dan Suzuki of Richard Bernstein Advisors, Steve the Chevron at Federated, and Terry Weissman of Macquarie. Guys, this was a surprise to most people. Terry, not so much to you. Walk me through why this move makes sense to you.
We thought that coming into the 2020 election in the U.S., Trump would, reignite the rhetoric from 2016. It seems that in 2016, the rhetoric against Mexico, pulling out of NAFTA, worked potentially in his mind. And so there'd be no reason to not do that again. I think one motivation here, however, and maybe why it's coming a little ahead of the campaign season, is because we know that Trump wants to get the USMCA pact approved.
Okay, everything else that you're hearing here this morning from these guys anyway is conjecture, period. Big difference here if you're an investor and or a trader or short-term trader or day trader. If you're a day trader, by definition, you exited your trades by 4 o'clock yesterday, right? If you did not, and you decided to hold, you're going to pay the penalty for trying to do two different things at the same time. That is to say, if you start off as a day trade and you end up holding that thing overnight, you run overnight risk. So this morning, you're experiencing that risk. Meanwhile, let's take a peek here real quick. Hold on. Right. A couple of things of note. Number one, how significant is this downside? Well, let me see here. Here's our dollar action. And interestingly enough, you're seeing the dollar pull back. Remember, the dollar's been going up, partially causing this downside of the last few days. Actually, the last month since May 3rd. Right? Today, you're seeing the dollar pull back mainly because the implications of what he's doing here in Mexico threatens to slow down the economy, which is already threatening to slow down. So this is not a good development. Again, if you're day trading, you're going to take advantage of it. If you're looking to take a new position, perhaps today is not the day. That is to say, you can still day trade today, right? But if you're thinking of taking a new position, maybe holding it for a month or so, you might be better off waiting until Monday. You've got to let the dust settle on this one. Hold on, let me get to the right graph here. Okay, right now, and this is relatively important. I mean, it's important early at this point in time, but keep in mind that this market more than likely is going a lot lower here today. Normally, we would expect you're going to wait for that buy the dip crowd to come in. There's no reason for that buy the dip crowd to get overly excited about this pullback. What we do want to pay attention to, this is the futures chart here on the S&P that you're looking at. And let's see where we, 1 second. You can see here, we are at a pretty important support level here. You'll recall 2,800 2 days ago was the level everybody was concerned about. We did not hold 2,800. Right? 2,775 became the next level. We didn't hold that overnight. We just dropped here to this new level, 2,750. This is the new support level. I do think we're going to go lower than that. I'm going to see here 1 second. Take a look. Again, this is a daily candle on the futures. What I'm trying to point out here is that little tail that you see here. See that little tail right here? To the extent that that has any value, we'll find out, but I do think that'll be taken out. Hold on. Any buying that's going on right now implies that whoever's doing the buying thinks that Trump is going to walk back this threat. Right? At this point, it's a threat. But you see that tail right here? Right? That tail is telling me, well, somebody's doing some buying, so there's, this is not a free fall just yet, anyway. Hold on. So let's see what that buying looks like. It's pretty lame. I mean, it's not much of a, I wouldn't call that a robust buying attempt here, but what you want to pay attention to here is still, so here's the news that broke out last night at this point. Then reality sets in at 3 o'clock in the morning. The European market opens. And this little bit of a rally right here, all of this, that's what gives us that tail that we're seeing on the daily candle. But the implication again of this whole thing is certainly negative, and so again, you want to trade with the trend. Here as a day trader, you can trade with the trend. The trend happens to be, as a day trader now, you're trying to trade with the previous day's trend, all right, or the previous week's trend. But the point is very important that you're, again, always trying to trade with trend. Right? You can, as I keep saying, you can go in with your eyes wide open and decide to take that contrarian trade. It really does underscore that trading is it's very unique to you. Okay, you are making these decisions, no question about it. But at the same time, how you play and you get to decide the parameters of what you're going to participate in. So, hold on here 1 second. So this, by the way, that's the Mexican or the U.S. dollar relative to the Mexican peso because of that news. And if you want to see what that looks like just for the Mexican peso alone, you talk about bad news. Oops. There's the value of the Mexican peso. That's exactly what happened this morning when the news hit Mexico, or rather hit it last night. But the bottom line is, and so that's the Mexican peso itself. This is the in relationship to the dollar. That's the reaction. So again, this is the dollar action in relation to Mexico. Meanwhile, second. excuse me. It is 9:10. This is the Dow Jones. The Dow Jones futures, okay, are off, what is it, 266 points. So the market's going to open up 266 points lower than yesterday. We're looking for support levels here. Look at the threat here. A lot of technical damage now has been done. When I say technical damage, I mean whatever positive setups you had at the close of the market yesterday has been pretty much destroyed here. So 249, we can work out 300, another 300 points. Yeah, we can do this. We can get down here. This would be your next support level right in here. So where's that? 24.7 from 24.9. That's another 200 points on the Dow. We can get down here. If you were to trade the Dow, DIA 24/7. So here's where the Dow, if you're trading the diamonds here, that's the way you would want to trade. And the market's going to open up way down here, 247. Let's see what that really looks like. 1 second. And I caution you again here. You got to make that distinction as to if you're a trader, right, and you're coming into this market today flat. You're not in any position, right? You're a happy camper because you've got an opportunity here to play it on the long side, the short side. If, on the other hand, you held from the previous night and you were on the long side, right? Yeah, you're not going to be a happy camper today. So look, here's the DIA. We closed at 251. It looks like we're going to open at somewhere around 249. $249. I think we'll break that. We will break 249 as we open. So again, at this point anyway. And if they do come in to buy, again, this is another good opportunity. This here is 249 right there. If they do come in to buy, all things considered, if I were looking to trade today, I would be looking to sell into rallies. I would be looking to short into rallies. So in other words, you let the market go up, right, and sell and use that opportunity to sell into strength. Selling into strength means you're going against the market. 1 second. What's our SPY going to do? Our SPY close at, this could be worse than what we're seeing here. I mean, I'm surprised it isn't that much worse already. The implication is, and the anticipation is from these guys, from the gurus and talking heads, is that Trump will backpedal away from the Mexican noise, right? Even if he does that, the China noise is getting more negative, and so I would be looking to short into rallies. That's how I would be playing this if it rallied at all. All right, hold on. So we got 15 to the open, 15 minutes to the open. Let's see how they're treating Apple. I want you to notice here on some of these stocks, look, again, this is pre-market action here, right? All of this is pre-market. So look, the low, here's the low, and somebody's been stepping in and trying to buy Apple, right? Again, my best guess here is that this will still all reverse. 1 second. That AMD, look, let's look at Microsoft, for example. Look, they're stepping in and buying, okay? And they're stepping in and buying because, again, at this point, that Mexican news is a threat. And it's not reality yet. It won't be reality until June 10th. The market plays on anything, okay? The market moves on perception. It adjusts its pricing with reality, all right? So if on June 10th, the tariffs actually go into effect, the market will react on June 10th. Right now, it does look like maybe they're trying to step in and buy this market, thinking that you're going to get a positive headline within the next hour. Maybe there'll be a news conference. Who knows? Your job still is, as a day trader anyway, you're going to trade the trend. If they do start buying this thing and the chart looks good to you, you can participate on the long side. That is to say, buy it long, or your choice is going to be you're going to wait until they do buy. Let's say they keep buying NVIDIA here, and they push it up, push it up, push it up, push it up. The way you would play it, generally speaking anyway, you would allow them to pull the market up. So when we open, they pull the market up, they pull the market up. You should see, price action should stall right there. If it continues up and goes above yesterday's close, well, that's a bullish thing, isn't it? Right? Or you can sell into strength at that point. In other words, you could short it as it's going up. That's what I mean by selling into strength, or shorting into strength, or either way. Right? Again, your biggest problem right now is trying to decide, should you try to play the buy, the little run up, or do you wait to short it as price gets into resistance levels? This is resistance. This is resistance. Anytime price is moving up towards a target, right, this is all resistance levels here. 1 second. 1 second. All right. So look, clearly we're going to see the VIX. Let's look at the VIX, I suppose, right now. We've got this is the VIX and the way we closed yesterday. We closed, I'm sorry, that's the current VIX right now, May 31. Okay, so here we are at 1927. I'm very surprised we're not even higher than that. One thing that's suggesting, remember, I just pointed out to you, we just saw pockets of buying. There is some element coming in there to buy. Personally, I would not play that buy side. I would expect this market will continue to sell off as the day goes by. Partly of what's going on, the only one consideration would be, if you're bullish, you're thinking that the end of the month crowd is going to come in and do some buying. Maybe. I don't think they will. Again, as I'm pointing out here, I think they will pull back. Let's see what the futures /VX. The futures in the VIX is not any greater. That's interesting. We need to see what some headlines are here. This would be nice to have. Let's see. Whoops. You want to see how serious this is? Let's see if we can get your feel here for. So look, these are daily candles on the on our indices. This is weekly. And again, you want to see how serious this is. Look at this candle. These are monthly candles, monthly. Okay. One second, another way to watch this. And in this case, I'm going to use the SPY again. Okay. What you're looking for, what you're looking at here is a what I call a mega chart. But look, this is on the SPY. It's a monthly candle. Monthly. Every candle here represents a month. So this is the month of May, April. We are hitting, or we are at that 5-month moving average, sitting right on that 5-month moving average. These are weekly candles, weekly. On the weekly here, we've gone below the 20-week, that dotted line is the 20-week moving average. Okay? That's significant. We've got to close under, and obviously when we open here, we're going to be lower. I think we're going to be at 270. We hit a low overnight here. You see it here, 275. One second. $275 is way down here. You might want, that's the 30-week moving average. You may want to maybe pin yourself to that 30-week moving average. In other words, if we break below that 30-week moving average, maybe that's what tells you go ahead and take it short. You're looking for something that you're going to use as a trigger, right? A trigger that will trigger you into this trade or keep you out of the trade, one of the two. Again, we're already under, this is that's the 100. I don't think I have the 200 on here. One second. Yeah, I do. Okay. All right, that's the 200 moving average. All right. That's the 200 moving average, and again, we are already under it now as at least as far as the daily is concerned, and that's a big negative. If we stay under the 200, that's what the implication is here again, that the economy really is slowing down hard, and again, that's the threat by these tariffs, the Mexican tariffs, is that things are going to get. It looked like the economy was slowing. This thing should accelerate. So, all kinds of different reasons for why they're doing this. When I say they, I mean the administration. And who knows? Maybe they're just trying to force the Fed into lowering rates. A lot of people do think that. One second. Right, get back to what can we play here. Again, if you're not following any particular stock, you may as well just follow the SPY. But for the sake of potentially getting a trade in. But the bottom line here is, what do we know about the market today? It's weak. What do we know about the market for the past week? It's weak. What do we know about the market for the past month? It's weak. The trend is down. The trend is your friend. It doesn't matter what Jim Cramer says, the gurus say, coaches say, right? The trend is your friend. You can, as I point out, you can trade against the trend, all right? There's nothing wrong with that as long as you appreciate why you're doing it and, you know, what you're doing, and also positioning yourself properly. In other words, you're not going to bet the ranch taking a contrarian position in a strong down market, you know, or vice versa. Yeah. Half the thing about trading is money management. You know, you've got to become a believer of that, if nothing else. All right, let's look at a few specific trades here. Let's look at NVIDIA. How about NVIDIA? NVIDIA. Would we trade NVIDIA? Interestingly enough, there was a comment here from Cramer. I don't follow Cramer at all. I see his tweets, but I don't follow him. But he did have a comment on here. You know, he's been a big supporter of NVIDIA, and somewhere in here made a comment about the, you know, now's your opportunity to sell it. I'll pass it. I'm not going to waste time on that. But let's look at NVIDIA for a minute. NVIDIA trending down, can we say? Sure, we can say that. And for today, the trend continues, no matter what you're seeing here. I mean, the trend is still down. Look, you've had little pockets of buying along the way, but you've had that just about every day. You know, they try to buy it. Trend is just flat out down. And that, of course, is the semiconductors. There we go. The semiconductors. Look, it does look like they're trying to come in on the buy side for the semis. I wouldn't trust that. Now, again, the other way to play it, you're not going to do anything in these first few minutes, are you? You know, you're just going to sit in their hands here, and you're going to watch the sentiment. You're going to watch the price action. What you're trying to determine here is there panic selling going on? Right now, it's not in panic mode that I can see it. And the reason that's what I was just trying to point out to you. We've got some pockets of buying. 1 second. So let's see. We know the automobile industry is going to get whacked. If you want to short something with anything, Ford, General Motors, the automobile suppliers. I think. Let's see. I don't know the symbol for this one though. Hold on. Come back to that in a minute. Anybody know the symbol for Delphi Automotive? I think Delphi Auto Parts. And so look, there's General Motors. See, right now, it's going up, right? If there's a sector that's going to be hurt, it's going to be automotive. And these should be going down. You don't know. There's no way of telling if these orders that are going on right now, is new money coming in, or are these people who put in orders to buy last night? Last night, General Motors looked like it had found the floor. Well, you see it here? This is last night. So people could have put in a lot of buy orders going into the close last night. But all of a sudden, those buy orders are triggered. Right? Obviously, they're being triggered at a lower price. The question here is, and we'll find out in a few minutes, if it does keep moving up, right, then that's not only last night's orders, that's this morning's orders as well. Right? That new money coming in. That, what I've just described is that behavior. Orders that were submitted last night, orders that were submitted in the pre-market, and then orders that were submitted the minute the market opened at exactly 9:30. People put in buy or sell tickets immediately at 9:30. Well, all of that's got to be, and that's what's going on right now. All of those have to be triggered and settled and resolved. And, in the next few minutes it will be, or at this point, maybe it already is. No way to tell. That's why you're going to wait a few minutes here and you're going to see, are they going to sustain or continue this trade, the upside. Let's see what they're doing in NVIDIA, NVIDIA here taking a big whack. Just continuing trend, trade with the trend. Now the market, in its own way, is always your best teacher, right? And the best teacher here always is trend, right? It doesn't matter what the gurus say. It doesn't matter what Jim Cramer says or any of this nonsense. And it's not so much that it's nonsense. It's just that if you're new to the market, all right, you want to get some interpretation.
Normally it's right here, but I gotta change those buttons back to something else.
How is that?
Right here.
It's a function of being aware. I guess that's the bottom line. So let's see what NVIDIA is doing here. NVIDIA, how about AMD? This is the buy the dip crowd does allow, at least from what we're looking at. 1 second here. Let's see, buy the dip. We have a pretty bearish trend indicator. We have a pretty bearish VIX. Banks are selling off as anticipated. And the bond market pulls back. That's interesting. So if the bond market's pulling back, let's see what that results in. Last week, all the way back here, I pointed out, and I did it again yesterday, but bottom line is they were buying the bond market, right? If they're buying the bond market, they're not buying stocks, and that's exactly what we saw. So look here, now you've got a very the bond market was overextended yesterday, the past couple of days. Today, even more so. I mean, if you expect a reversal in the bond market or a reversal in this market, you're going to need to get the bonds to start selling off. Right now, the trade for today would be buy bonds, short the market. 1 second. All right, this was the cup and handle I pointed out in the bonds, 20-year bond. Here's the breakout Here's the runaway. Again, you know, you might position for that. You might have positioned yourself short on this in the stock market if that's what you were playing. If you were playing the broad market, this would have been a very key indicator. Right? And I keep pointing that out in my morning emails. Right? The bond market is the key. The bond market is the key. Well, here it is again. Right? On the other hand, if you're an absolute day trader, and again, by that I do mean that by the end of the day at 4 o'clock, you have no positions. All right, you're simply trading on the momentum or the action of the day. Where people get themselves in trouble consistently is by starting off with a perceived day trade, and by the end of the day, the position is either running against them or it's in their favor, and for whatever reason they decide to hold. At that point, you're not day trading. At that point, you're a potential investor. 1 second. Come on, Chuck. All right, let's get back to SPY. Remember, at some point, markets are going to have value. Right? Well, we're not going to discover value today. Right? How can you discover value if you've got potential threats coming out of, and that's the point here. What are companies going to do? And they're not going to do it. They can't do anything. So they're at the mercy of the marketplace out here. And if you want to see Trump reverse this decision, right? All the market has to do here is drop another couple of percentage points in one day, right? Today, for example, right? And all of a sudden you'll get a reversal coming out of the White House. The market, by the way, is known to do that, right? When all else fails, the bond market takes control, and that's exactly what you are seeing here. That's why if you've been reading my morning emails, I keep pointing that out. The bond market is key, has been and will always be, because it's 7 times the size of the stock market. 1 second. I'm looking, okay, so how about we've got, yeah, so what we're interested here are levels. We're interested in, 1 second. All right, let's take a look here. See this one. This one's we're sitting on, this is AMD here, again, sitting on its 20-day moving average. Anything that crosses below that 20-day moving average has the potential to go to the other side of the Bollinger Band. In other words, as what you're seeing here, here's the price action. And if you got a close in price under the 20-day moving average, the odds increase that price action will come to the lower Bollinger Band. It works the other way too. Once price action crosses above the 20-day moving average, right, you get price action that increases its potential to move to the opposite Bollinger Band. That's why you run, when you run the Bollinger, you run it with the 20-day moving average. Hold on. See this support level here? See it here? And that was the futures, but I can't get those horizontal lines on that other profit chart. I have to use this chart. So let's see what that means for the SPY. if you saw in the headlines this morning, and you can go back over the previous few weeks, but was there ever any mention of the possibility of tariffs being applied to Mexico? Right? So this was clearly something right out of the blue, the implications of which have yet to play out. Let's see here. Here's your next target, 272. On the S&P. Let's see how accurate that might be. Click. All right. I'm going to clean this up. Just to make my point here. 1 second. So here's the last low that we've seen here. Is Fibonacci going to help us determine price levels? Look, we've given back almost 100% of the move since March the 8th. Right? You see it here? If we come down here, that's 100%. Right? So let's find another. Here's a breakout point. When you're using Fibonacci, right, you could make sure we all understand this, but generally speaking, you use a Fibonacci like from here, right? You use it from a low to a high. Right? Here's another one. And you want 2 or 3, at least 2, different Fibonacci's from different levels, because what you're looking for is the overlay or where they cross each other. That becomes the meaningful price level. So in this case, going back to December, where do I see price levels overlapping? Here's 1, here's 2. That's way down here. I'm going to get rid of this one because we've given up almost 100%, so that one becomes impractical. Right? So as I just pointed out, most of the time when you take Fibonacci, you're going to take it from a low to your point. But you also want to take one, or I learned to take them. Here's a breakout level. See right here, on this day, we broke out of this trend. Now, there's no secret mathematical, the mathematics behind Fibonacci speaks for itself, but it's up to the trader here as my starting point. All right? I mean, again, you're going to start off from a low point to a high, and you're looking for different points. But I also have learned, or Bollinger himself taught, to start one from a breakout point as well. And so now with this, where do we have overlapping numbers here? Anything below where we are now? Overlapping. I wouldn't call these aren't overlapping, but again, you could see the proximity from one to the other. And another way to assist us here, tool-wise, let's put in the profile, volume profile, click. So we are already under all of this. We are under here. Here we are right here. On the downside, there's 272 levels. Look, there's one number. I've got a little bit of volume here. And that's the key, like I was pointing out yesterday. If the market breaks these support levels like it did today, right? Look at the open space you have here. This is room to run, right? On the downside. And you've got very little, except for here, you've got very little support levels on the way down. Right? So that's why these major support levels and minor support levels, but the major ones are significant once they're broken. And we just broke that one as of this morning. The big one here above us, that's history. Hold on. Let's clean this up again. All right, so again, I'm shooting for roughly that 272 level as a downside target. We could be there today. We could be there by 4 o'clock. And again, let's see how aggressive they are here. And so what we're seeing here are pockets of buying. The thing to keep in mind here, as always, this is just today's action. This is today's action since 9:30, 133 ticks. I'm going to change this to a minute chart. Today, 1 minute. That's what the minute charts look like. Okay? You can see here the difference between these are the minute charts and what I just showed you here. Are the trades taking place inside that minute. And so what's important about what we see here? Again, this action is important relative to yesterday's action. The price today, right now, is relative to the previous bottom. As the price action works its way up, it's relative, where we were right here, right, is relative to this. On the way down, the only thing that matters is this support level. Look, basically a double top. Whoops. If you were sitting here trying to debate when you should buy, and maybe you're interested in going long on the spot, right? The things to watch for here anyway, we're using these indicators, the volume weighted average price indicator. Remember, that's what this guy is, volume weighted VWAP, volume weighted average price. Right? The idea is that things get bullish once you cross that dotted line on the way up, and they get bearish on the way down. A lot of times you'll see during the course of the entire day, the price action has trouble getting above that VWAP line. It just keeps hitting it and bouncing back, hitting it and bouncing back. Here we're about to make new lows. We're going to break this support level. Meanwhile, let's look at the SPY for a minute. SPY, hold on. What are the SPY options saying here? All right, SPY. You could see here again the SPY right now is trading at 275.30. Your options are your price action is always at the money. All right, the closest thing to at the money. So this guy's in the money. The run below it is out of the money. 275 and 275.5. Let's quickly look. Net change for the day. These are calls. Net change for the day. That's from yesterday, down 255. How about that? You know, you live with the option, you die with the option when you hold them overnight. There's no question about that. That's why, you know, when you're trading options, make sure that you're aware that what you're buying when you trade an option, when you buy an option, right, you're buying time, T-I-M-E. Right? That time, look, these options have 3 days left to their life, right? These guys have 5 days. They're going to cost you more money to go out in time. There's no question about that. Right? But they also give you the greatest reward. Right? That's your trade-off. You're the trader. Make up your mind. What do you want? You want to buy the time or you want to buy the reward? And if you buy the reward, you're also buying the risk. One second. Where you really get in trouble as a day trader is, again, if you're starting off with an option and you end up holding that thing and you have a big move against you, and a day like today with that out of left field or out of the blue unexpected move, yes, that's what hurts. 275.58. What do I see here on the SPY? 1 second. All right, trend is still down. You could almost point, if you know your patterns, you might try to make an argument that this thing is starting to wedge. If it's a bona fide wedge, it will bounce up. 1 second. When I say the wedge here, you'll know this line and this line are not parallel, right? It's starting to wedge together here. 1 second. So what is this action in relationship to yesterday? Well, we know that today's action sort of stands on its own, right? I mean, it has no relationship to yesterday other than on the way back up. If price action were to reverse right now, on the way back up, look, you'd have to pay attention to this resistance. Also happens to be your pivot point. That's an, so if price were to start running back up here, right, at this point, you're trying to determine, are the odds with you, and at what point would you buy in here? You're sitting at 275.64, right? It's only a few pennies away from the morning high, which happens to be the open here. Right? Personally, I wouldn't take that. I wouldn't take that on the long side until it broke. It would have to break the morning high. That's one thing. And the morning high, 270, is only 20 cents away from resistance of 2 days ago. Right? So there's not much opportunity here to to be correct, all right? I mean, in other words, momentum would have to break back above that pivot point. And if it's, I mean, if it did it, it would be doing it on the heel of some sort of positive headline. Right now, I don't think we have any positive headlines out there. One second. All right, 1 second. Just want to see if there's anything positive. Nothing. Whoops. Everything's still pretty negative. These are 3-minute candles. Among other things that you might do here, maybe you got to go to work or something, and but you can put in here, and you could put in an order to buy your puts or short the stock, whatever you're doing. Should price action break a certain price level? So look, if we break the price action for today's low, and so you want to put an alert there. If you break at or below, let's see, I don't know, 275.25, something like that. Click. And you get ready to take your trade, right? 1 second. On the other hand, let's say the price action does start to run up. So remember, the market's only been open 28 minutes now. Right? But the market, let's say we push up, we push up, we push up. And one thing you know about the market is that 10:30 reversal. So at 10:30, between 10:30 quarter to 11, the market tends to reverse if the primary trend is strong, it will reverse at 10:30. When I say primary trend, I mean the trend overall has been down. Right? So at 10:30, what's going on right now is the big money is maybe trying to suggest, you can see it here, big money is trying to suggest that, hey, it's okay, it's safe to come back in the water. Come on, jump in here. Right? Buy your call options, right? And you'll make some money. Right? And meanwhile, right, the big setup is when price action does get up to a certain point and time, and usually it's around, it's not a hard rule, but usually it's around 10:30. And all of a sudden the market starts to reverse, and it reverses hard. Right? And it's called a bull trap. Right? So the bull trap works just like you're seeing here. Right? They entice you to come in. You do take the bait, you go in, and all of a sudden you get a strong reversal. And what can you do? You know, you got to get out. You got to cover. On a day like this, frankly, the best, if you're not experienced in doing this, the best thing you want to do, you want to study. You want to do what I'm doing right now. Right? You're going to sit back and you're going to follow your minute, 2-minute charts, right? And you're going to look at the behavior, one chart, one time perspective relative to the other. It becomes a learning moment here, if you will. 1 second. going to get rid of these lines here. So now, according to whatever time perspective I'm trying to trade here, look, if I'm trading, I don't know, the 5-minute charts, I've got a very short-term, here's a short-term chart I use. Whoops. Appropriately named, very short-term active. And as a day trader anyway, you know, you might use something like this. My long-term chart is 30 minutes here, right? So every chart below that time, right, has 15 minutes, 5 minutes. Right? So I'm concerned about the sensitivity of one of the lower time charts to the previous chart. Right? 2 minute, 3 minute, 5, 15, 30. And I'm using this, again, now as a day trader, I'm using the 30-minute chart as my longer term chart, right? I already know, even though it doesn't matter what stock this is, I mean, this is the General Motors right now, but the point is that the trend has been, I'm aware of the major trend. I know the major trend has been down. And so once again here, I want to trade with the trend. So since this thing is going up, I might be trying to find an area where I can get in on the short side while it's moving up. You see that long bar here that doesn't belong there? So I'm going to remove that bar. See 1003. Okay. I'm suggesting here that this market is going to further break down as the day goes by, barring a headline that comes out of the White House that says, oops, we were just joking. You know, we're not really going to do that, right? If they came out with something like that, yes, you can bet that this market would rally. But I don't think anybody realistically expects that, although I guarantee you a lot of these people in here who are doing the buying, that's what they're telling me on. The easy way to trade this thing is with the trend. You don't have to reinvent the wheel here. And of course, there's a big difference between playing the stock outright versus playing options. Right? In options, in a volatile market, you can get whipsawed quite a bit. So it behooves you to get your act together relative to either your chart reading and or using your options. Well, 1 second here. Let's see what our. So here's our SPY. That's the SPY chart. What's our dollar doing? Dollar. This is today. Dollar action's coming down. So again, a weaker dollar ultimately does help things. Remember Trump kept complaining about the strength of the dollar, right? Hold on. Here is the bond market. It's still buying bonds, so this is what you look. This thing turned at 5:30 this morning. The bond market started to pull back just a little bit. This is the futures market. This is the futures for trading the 10-year Treasury note. Let's look at something else. This is the TLT. This chart we've already looked at. That's the 20-year bond. You can see here they're still pushing it up. how sensitive do you have to be? You know, if you're playing minute charts, which I don't recommend, it's, you know, you don't need that kind of stress. But look, the bond market, here's the 20-year bond. They're still pushing it up, aren't they? TLT still pushing up. The rules don't change, even on a busy, busy day like this, or a fast-moving day. Right? Look, you're still going to be concerned with your VIX, which again, at this point, it is relatively interesting that the VIX, instead of climbing to 20, 21, 22, right, is holding. That is telling me, you know, I mean, keep in mind, a reading of 19 is very high, very bearish. They are buying a little on the banks. Your trend indicator telling you the number of advancing trades on the buy side, the advancing issues on the sell side is flat. This is not overly bearish here. What else do we have? We've got oil prices coming down. We've got the dollar coming down. Could we get a rally here? Even any rally that would start from this point is still a candidate to be shorted into. What you're going to end up having to do is literally wait. You'd be waiting for this. 1 second. So here's TLT. You at least would want to wait for TLT to start turning over. TLT would have to start coming down. All your other, let's pull it back to the SPY for a minute. $30-minute candles on the top left, 15 minutes here, 5 minutes here. I see what's directly above me here is resistance. So even if we turn bullish and try to advance here, right? 276.9, you'd have to get above that. But even if we did all of that, even if it did that, what do you see here? Want to trade with the trend. That's what the point I'm trying to get across to you here is, given the right signals on the lower time charts, you're going to want to take it short. And any number of ways to do that. Let's see, look, even if all you did was this, one second. Right. Again, we are looking inside the action of minutes. All right, so the market is 40 minutes into the day. Even on this action, what do you recognize here? Double top, double bottom. At this point, look, I mentioned earlier about a price action crossing this dotted line, that dotted line being the value weighted average price. That's the key line here. And right now, again, a little undecided, aren't they? They sold it off, but I guess what's interesting here is that there is buying. How much support is there? Again, at this point, if we came down here, I've got an alert in there at 275.25. I don't know how many trade options, but if you are trading options, make sure you're using this page here. 1 second. Okay. We want to see what the value of that option is going to be. All right. If you're not using this page, you should. I'm going to send that to you. If you look in your chat box, the GoToMeeting chat box, I just sent you that link there. Copy that. All right, so a quick check of the headlines. As we're closing in here on 10:30. And the worst that's happened here is that whatever setups you saw, and everybody saw, developing potential positive bullish setups as of last night's close, right? They've all been destroyed now, right? So you got to give the market some time, or your particular stock, whatever you're watching, some time to settle down and reestablish new patterns. Right? You want to trade that pattern, or whatever pattern that you're comfortable working with. 1 second. So technology got ripped quite a bit, even more. One second. That's interesting. Look at this Taiwan semiconductor here picks up. Let's having a, well, I wouldn't play it because it's a lower price stock, so control that. What's over 10? There you go. It does look like these semiconductors are being bought for the day. That's one of the things we found out right away here this morning. Hold on. Right down here at level 2, I'm watching, in case you're not used to working with this. Multiply these numbers down here by 100, right? So that's, in other words, that's 500, 600, 900, 100 shares selling at that price. Here it is. 6,600 is a buying at that price. The execution price, that top line is what you're watching, right? These are limit orders. Keep that in mind. When you look at this stuff down here, level 2, these are limit orders. It doesn't show you here market orders. Market orders are executed immediately, right? These are limit orders. These are, as I just said, look, I put up here, you might want to take it short at 275.25, right? So if I did that, you'd see an order up here, 275.25. It would show up here. Okay? If I said sell it at 275.25, or I'm sorry, buy my option at 275.25. So again, this is a tool. Using level 2 is nothing more than a tool, just like all of these things are. And again, if nothing else, one second. Again, it's 10:17. You know, look, you can almost see, I mean, here I'm probably overreaching, but remember, these are not, is this a potential inverted head and shoulder developing? If it is, that's a bullish thing. Inverted head and shoulder. Again, I'm bearish here. I do think that we're going to break these lows. One second. See, on the minute chart, so we're 46 minutes into the day here. A little hard to read. I mean, you read in the same way. I'm just pointing out the distinction between using tick charts. And tick charts only make sense. I mean, if you're a scalper, right, and you know, you're trying to get in there and pick up 25 cents on a trade or whatever, you're going to use the ticks. Futures traders use the ticks. I use it just for sensitivity purposes. I can get a feel, or I think it helps me get a feel for the aggressiveness of the buyers or the sellers. Second. I do find it interesting that they are coming in though and buying the semiconductors. So the point being here that presumably they're trying to suggest that there's value in the semis. But they thought these things were incredibly overpriced, so this was a good time to get out of them, but they're not. Hold on. Look, this is interesting, isn't it? Look, you've had the market's been going down, 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 and Nvidia's been leading the way down. All of a sudden, on a horrible day like this, look, you have an up day on Nvidia. Tons of selling. All of this basically is telling me anybody who wanted to get out of Nvidia in the last 7 days had gotten out. See that volume? That's negative volume, that red volume there. That means there was more selling volume than buying volume. And all of a sudden, on this particular day, as ugly as it is, right, you're having an up day. So to me, they're running out of sellers of NVIDIA. It doesn't mean you can day trade it, but as long as if you think the world economy is not going to collapse, then maybe you got a buying opportunity here on NVIDIA. That's an important distinction, what I've just pointed out to you here. All of that selling, all of that negative volume, right, and all of a sudden on a horrible day like this, you would expect the bottom to absolutely fall out, and it's the opposite that's happening. So NVIDIA looks better and better. Doesn't mean it can't go lower. It can. If the market decides to crash and burn today, NVIDIA will still go down, but they'll still come in and buy it. All right, got to go at that for now. Be mindful, at least from my perspective, I'm looking for a lower low on the SPY. We may not get that lower low on the SPY if they do keep coming in on the semis. If they keep coming in on the semiconductors and technology, if they're saying technology has been so oversold, maybe we've got the morning lows already established. But last day of the month, I think we'll see lower lows. That's my call for the day. All right, guys. We'll see you on Monday, see how things play out. Talk to you then.